Listen, folks, with the Federal Reserve providing a tacit platform for additional QE, the gold market has responded with incredible vigor. Here to break down this breaking news item is Lynette Zang. A true matriarch of the precious metals investment sector, Ms. Zang is currently the chief market analyst at ITM Trading. Prior to that, she's held leadership positions in banking and equity brokering and has been involved in the market since 1964. And what makes this particular juncture so compelling is that gold has reached absurd levels of fundamental undervaluation. Not only that, we've recently broken through key technical levels that will carry prices resistance-free to fresh multi-year highs. This is an opportunity that you can't afford to miss out on, so please take the time to visit crushthestreet.com/goldbook. I can't stress this enough. This is a time capsule moment for you to profit from precious metals at a severe discount. Please go to crushthestreet.com/goldbook. So without further ado, here's Lynette Zang.
Hello, everyone, and welcome into crushthestreet.com. We are seeing a major sea change in what is going on in gold. June has been a very spectacular month for gold. And also the stock market, which is an odd dynamic. And we're going to be asking Lynette Zang about all of this today. She's my guest here at Crush the Street. I couldn't think of a better person to have on the line than her today. She's the chief market strategist of ITM Trading. Since 1995, they have been a full-service precious metals firm specializing in gold and silver products, ranging from bullion to rare coins. She's made a splash in the precious metals community and been putting out amazing content for a few years now. So without any further ado,
Many years.
Yes. Lynette Zang, thanks for coming on Crush the Street.
Well, always, Kenneth. It's my pleasure to be here. Thank you for having me.
Well, I'll start it off here. As I told you in the pre-interview, I want our conversation to surround gold. What's going on in gold? Can we call what we're seeing here a bull market in gold? And is it believable?
Well, number one, interestingly enough, in perception management, the Wall Street guys would like you to think that gold hasn't done anything, but in reality, it hit a bottom in 2016 and has not looked back. And I think it's up over 30% just this year alone. Now, we are talking about the spot gold market, which is what people look at and think of as gold. But even that does not reflect its true fundamental value. It's still severely undervalued. But just recently, it broke a cup, which is an accumulation pattern, but it broke it out. And so you're seeing it go, and I don't see any resistance in there until it hits about 1550.
So, we've been really describing gold the last few years with the way it's been managed downwards, like a beach ball underwater, getting pushed further and further underwater.
Mm-hmm.
Is there any loss of control going on by the major bullion banks or those who might have an interest in manipulating gold price?
I don't think that they've lost control until I see it really moving toward its fundamental value. However, there is a flight to safety, and gold is the true safety asset. So look at what's happening on a global basis. We're inside of a massive sea change. And I think part of what you're seeing is Wall Street rushing to gold.
Interesting. Well, so what are we seeing then with the dichotomy between the US stock market, with stocks having their best June in 80 years, while gold is going up? That doesn't sound like a safe haven move, or the dynamics of what happens during a safe haven. Is the action we're seeing in gold indicating something else?
Well, I'd say it's more the action that we're seeing in the stock market that's indicating something else, because we know, and even according to CNBC, that the stock market is severely overvalued. I mean, severely overvalued. But, you know, you have to keep in mind, it's really all about what's called perception management, managing how you perceive things. So gold is money. And once after 71, when we were allowed to buy gold again, they started to really treat it not so much as money, but as a commodity. And as such, and this is why it seems confusing, because this is what we've been taught, but as such, when the stock market goes up, the gold goes down and vice versa. So that's why it seems unusual, except that that relationship actually ended, I'm pretty sure it was 2004. I'm pretty sure it was 2004, October 9th. I might be off a little bit. And
can you reiterate, what did you mean by that? What relationship exactly ended? The inverse relationship between stocks and gold?
Exactly. The inverse relationship between stocks and gold, where if stocks went up, gold would go down, and if stocks went down, gold would go up. So back in 2004, that relationship was really demolished. And so you could see stocks and gold go up at the same time, which is what you're seeing now. The difference really between then and now is that, and this goes back again to perception management. We were taught that if the stock market was a reflection of the economy, because way back in the day when a company would issue shares of stock, it was to grow their business. And that means they'd hire more people, they'd buy more property or equipment or what have you, and it would actually stimulate the economy. But that's not been true for quite some time, actually. And if you go to the SEC website on any new issue, and obviously I haven't looked at them all, but most of the time it's about giving early investors access to the markets and the ability to cash out. So it's more of an exit strategy than as a true reflection of what's happening in the economy. And that's exactly what's happening in those markets now. They have to keep the markets up, even at these extremely high levels, because that's what we think. Oh, okay, if the stock market, if I open up my 401k statement and it doesn't look horrible, everything must be okay. Unfortunately, I think people are going to be opening up their 401k and their pension statements soon, and they're not going to be real happy with what they see.
Well, I know as we closed out 2018, interest rates were rising, right? And we were seeing this pressure on the stock market, and we were seeing gold starting to go up. It really seemed like, the stock market was starting to lose control, or, the Federal Reserve might be losing control of the stock market. And then gold started to respond as the safe haven, as that inverse relationship to the stock market. But we're really not seeing it play out exactly like that. And I guess it's just a matter of trying to wrap our minds around what is driving gold higher. Is it the interest rates? Is it something that's going on in Wall Street, as you already pointed out?
Could it be Iran? Could it be the conflict with Iran? I mean, last week, we were within 10 minutes of a possible World War III. 10 minutes. Could it be what's happening with China? I mean, President Xi and the North Korean president just met, and they seem to be consolidating their power against the US. Could it be the Brexit, which just keeps getting postponed, but really could create a lot of crisis between British manufacturers and European suppliers. I mean, so Italy's bank, I mean, there are so many things that are going on. And with all of the central banks on a global basis, look, they were sellers of gold prior to 2008. They have been big buyers of gold since 2008 because they know all they did was paper over the problem and allow it to get much, much bigger. And so part of what you could well be seeing is the recognition in Wall Street of the central bank accumulating, global central banks accumulating, because more of them are. and they're at the highest levels ever in as far as accumulation goes. Of course, that's physical. And they've been doing that since 2008. So, in theory, you should have, I hate the word should, but you should have seen spot going up and up and up, going past that 1900 that it hit in 2011. And, but the problem is when it was in jeopardy of breaking 2000, that was way, way, way too visible for the central banks. So that's really why they had to sell God knows how many ounces. Last time I tracked it was 62,000 ounces of fake gold that would never exist to 1 ounce of physical gold. So they can do that, but I think that even Wall Street is rushing to the safety because who knows what's going to trigger the next financial crisis. And it's on its way. Right. And have the central banks lost control? They could not raise rates, which they needed to do to lower them into the next crisis, nor could they run off their balance sheet, which they need to do to continue to have global confidence in the currency into the next crisis. So they were absolutely, and globally, not just in the US, but globally, central banks have been unable to get into any level position to deal with this next looming crisis. So they better make the stock market keep going up so you stay in it and don't realize that you're about to get your head handed to you.
I like to do a lot of self-reflection when it comes to the investments that I make, and that we make. And I feel like because of the way gold has traded, and I know you acknowledged the bottom that we saw in the end of 2015, 2016. Mm-hmm. And then, but what we've seen since then has been quick spikes up over 1,300 for it to fall back down pretty quickly. It's almost like right when investors started to get excited about gold, disappointed, right? And I feel like so many people have just been so disillusioned by gold, mm-hmm. even after we bottomed out because of that type of trading and, of course, that extended bear market that we saw since 2011. And I really did feel that $1,400 was we needed that forward confirmation, to really start to get people back on board and believing this bull market, because we've been at 1350 a couple times already, only to be disappointed. So that psychological barrier really needed to be broken. So what are you seeing in terms of investor enthusiasm towards gold here at the $1,400 plus level?
Well, it's always funny. Number one, even though as you said, it would go up and then pull back, you would definitely, it's easy to see when you look on a long-term graph that there were higher and higher lows.
Right.
So that's how it was building that cup. But yes, the phones are ringing like crazy. We're getting a lot of inquiries. So people like to buy things that are going up. They feel more comfortable with it, when really the time to buy it is when it's most unloved and it's most hated. That's called buying low and selling high. So, but I would also agree with you that breaking that 1,400 is actually 1,360 was the barrier, but 1,400 would be a psychological number. So 1,360 was technical, 1,400 is psychological. And yes, we're a lot busier with people calling in. And even if we have a pullback, typically when you break a resistance level on the top, and this in spot gold's case, that's 1,360, that then becomes your support level on the bottom. So while I see no resistance till we get to about 1,550 on the graphs, because there's a gap that it's going to fill, to tell you the truth, nothing goes straight up, nothing goes straight down, but I think the new bottom is now in, and that would be 1,360. And a lot more people are getting involved in it. And once we break that 1,550, I see no resistance in there till we go and we test that 1,900. And I think that's going to be technically a challenging level to break through, because again, it's threatening that $2,000 mark, and it just makes gold more noticeable, which is not what central bankers want, especially when they've lost control.
Well, we're still nominally pretty far off of $1,900, which would suggest that we're still fairly early in the game.
Yes.
So that's good for people who are buying now and, you know, needed a little more confirmation to be able to pull the trigger on some of their purchases. But, you know, beyond that, I mean, we're 9-8 years past where it hit that point. The world's a much different place. I mean, arguably, the spot price or the actual physical gold price should be much higher than that. So maybe you could speak to that a little bit. I know it's tough to put a price target on anything, especially in the nuanced, multifaceted world of economics. But, you know, what are you looking at in terms of a price target, or what would you feel very comfortable seeing gold go to?
Well, you know, for me, I'm all about functionality, because even though we've been trained to believe Wall Street, I've been a banker, I've been a stockbroker, I understand that world too well to be fooled by it. And so, and the other part of that is the central bankers have been telling us since 2013 that we need to have a global financial system reset. Okay, well, how do they do a reset? Maybe there's lots of ways. No, there's one way. This has been done over 4,800 times. We're not talking long ago history. Look at Venezuela right now. It's been happening there, in Turkey, Iran, a lot of other places. So when they do if they were going to do the reset today, I feel quite confident that you would see spot gold go somewhere north of $10,000 an ounce. Because what a reset really does is it takes fiat money, which there's infinite supply. They can create as much of that by pushing a button. Takes very little effort, very little energy to create it, and they revalue it against something that is all real intrinsic value, which is gold, because it's used across every single area of the global economy. So you have massive, really, I mean, I could be wrong about this, but I believe that the value of gold is in the broadest base of buyer because of its many uses, whereas fiat money, dollars, euros, yen, whatever, has use in the financial system only, and only has value because you and I agree. So when they revalue that, since there's a finite amount of gold, an infinite amount of fiat, which is created from debt, so we just have to look at how much debt is there out there versus how much gold is there out there. So if I'm saying 10,000 in terms of dollars, honestly, that's really low. It's just that if I said what I really thought, people go, oh, she's out of her mind.
Right. Well,
No,
I mean, I think a lot of people would have been, you know, it was hard to even believe that we would have moved up $100 plus in June, right? You know, because again, that mindset was just not there. So I think as we move higher, especially as we start to see some material moves higher, some of those projections are going to start looking a lot more realistic as time moves forward. But I want to get to the gold-silver ratio. We're hitting levels that we really haven't seen since the early 90s with the gold-silver ratio. Why is silver lagging gold so much in this environment? Or is it just, is gold moving first? And if you don't mind, I'll compare it to like what we see in the crypto space. Bitcoin moves, you know, everything else lags, and then it slingshots up with the move that we've seen in Bitcoin. And maybe that's what we're seeing to a certain degree in gold. Or is it just a different dynamic? You know, is gold moving for a World War III type scenario? I don't know. I don't know how to fully wrap my mind around this.
Well, you know, since everything is so easily manipulated with paper, then it's easy to manipulate that too. But gold is the primary currency metal, and that's why I think you're seeing it more react to the geopolitical factors than silver is actually. But I like them both. And silver at 15, 16 bucks an ounce is ridiculous. The true value of an ounce of silver right now is somewhere north of 600 bucks an ounce in terms of fiat. So again, it's easy to suppress it. Gold must be mined. Silver is a byproduct. And silver is, they're both used in industry, but I think that silver is more of an industrial metal. So part of its price action could be tied to the slowing global economy. But for me, because I know a lot of people will go, oh, silver's a much better deal because it'll move up much more. Well, you have to think about how am I really thinking about that? When that statement is made, it's because people put value in dollars, in this country, dollars, in that fiat money that really does not have any value and by design is constantly losing value. So both of them, for me, it's about function. What am I trying to accomplish? Silver, you know, and it really does go back to what am I trying to accomplish? For me, for the barterable part of my portfolio, for my day-to-day to make sure that I can put gas in my car, that I can buy a box of strawberries if I needed to, which of course I have the urban farm, so I wouldn't need to, but if I did need to, that's what silver is about for me, because it's hard to carry a lot of wealth in silver in a teeny package. It's just too big. It's too unwieldy. Whereas with gold, you can carry a lot of wealth in a teeny weeny package, and you can go anywhere in the world and you can convert and instantly have purchasing power. But it's just easier for the growth part of the portfolio to do gold to convert into other assets when they are undervalued, like both silver and gold are now. But the silver gold ratio, history has shown us as we've gone into hyperinflationary events, and I do believe we're at the beginning of it, and the monetary velocity graph chart at the Federal Reserve it's shown an uptick. It hasn't really, so we might, but I think we are. And I think we are because global central banks have really lost control. They can't raise rates. They can't run off their balance sheets. The only thing they can do is, how low can they push the rates? And how much money can they print? And will all of that matter anymore? Which even the talking heads in mainstream media are saying, yeah, in July, when they lower the rates, it's just not going to make that much difference. And we've actually seen evidence of diminishing impact every time they've done another QE, which is money printing for free and giving it to the banks. We've seen diminished returns. So the tools in their toolbox don't have the same impact that they did before. And I think that's about to be tested in July. And I think July could be a really pivotal month for central banks, actually, because Mario Draghi hinted that they're going to lower rates, and the Federal Reserve has basically said they're going to lower rates. So we're about to have a whole bunch of declining rates. Not a surprise, because since 2009, when Sweden was the first one to lower the rates, every single country that has attempted to raise the rates has failed to be able to do so. And there are no exceptions to that.
Right. On that note, I just want to get your thoughts on Donald Trump, not politically or, endorse, not endorse, all that stuff.
Stay economic.
Yeah, exactly. But my question is along the lines of, the Federal Reserve, like we're talking about, it's almost like, Donald Trump obviously takes a lot of credit for the economy. He likes to get out there and he's a major promoter when it comes to the stock market doing well. And he acknowledged the bubble. But when it comes to the Federal Reserve, you'd almost wonder if they want to collapse the system on his watch, or to do something like that. But, when they do things like manage the interest rates for the benefit of the stock market, it's almost like they're all together, all in cahoots, and, everyone's on the same team when they are managing everything in the upwards direction. So, not a political question, but just what are your thoughts on that?
Well, I think that President Trump has chosen that that's his scorecard. But again, I don't think a rising stock market is truly reflective of what's really happening in the economy, since with something like 64% of the people have said that, since the crisis in 2008, it has not gotten better for them. So, my thought is that we are in a synchronized world on the way up as well as on the way down, and that wherever it comes from, it's going to spread throughout the system because everybody is incestuously interrelated, but the economy is not doing well. If the economy was really doing well, why would they have to lower rates? If the economy was doing really well, why couldn't they run off their balance sheets? Why couldn't they really get into position to deal with the next crisis before it happens? Because it's not doing well. They can pump money into the stock market because just as it's easy to push spot markets down. I mean, gosh, what? A central bank, it costs them literally $110 to control 500 ounces of gold and 5,000 ounces of silver. $110, and they don't have to work for that $110. They push a button. Okay. Well, they can do the same thing with stocks. That's why we've seen the markets go up on a decline in trading volume. We are not seeing the participation in the markets because it's been artificially manipulated up through derivatives. And by the way, on that note, because I was just looking at this graph this morning on spot gold, what you're seeing is a huge rise in volume. That goes back to the other question that you asked me. But there's a huge rise in volume as spot gold is moving up. That shows greater participation, right? But you're not seeing that same kind of behavior in the stock market unless the stock market's plunging. Then you see a spike in people participating and attempting to get out. But I think that this is just about hiding the truth from people, which is when you want to get out, whether or not you're going to be able to get out is highly doubtful because there's just not the liquidity there. They're not the buyers on the other side. It's a one-way market.
Lynette Zang, everyone. Lynette, you're first class, and I appreciate your time here at Crush the Street. I want to ask you about itmtrading.com. What makes you different? Obviously, some options out there in regards to where we can get our bullion, but what makes you guys different?
Well, I've been studying currencies since 1987, and I developed a strategy for myself even before I came here in 2002. And everybody here is trained in that strategy, and it's frankly based upon repeatable patterns, but then customized to your goals, your circumstance, and what you have to work with. And it's really quite a comprehensive strategy. So, you can get physical gold and silver in lots of different places, but the question is, what is it really used for? So that goes back to the functionality. And what's the right kind of metals? Because as you indicated earlier, we do anything from bullion up to rare coins. And it just depends on what your goals are. So we work with you to define that and create your own strategy so you know what to do today, what to position into. But then this is a family here. So you're really with us through this whole trend. And if you pay attention, which is what my work is about, is to help you understand how to move through this whole cycle to get the best benefit for on the other side of this mess, which...
Lynette, and if you would, share some closing thoughts here on that, because, I feel like a lot of people, they can miss the boat if they wait too long.
Yes.
What are your thoughts on that? And maybe you can just share some closing thoughts in terms of, urgency and why people should be preparing if they haven't yet done anything to prepare for what might happen to fiat dollars in their bank account.
Well, yes, I would, because what's really happening, officially, according to the Federal Reserve, we have lost well over 97% of the value, the purchasing power value of the US dollar. And hey, Fed Powell was on this morning talking about that need for 2% inflation and maybe even overshooting that and running hard. And what that really means is that the dollar is overvalued and the central bankers are going to take it down. So if you leave your wealth in fiat money, even in the stock market, which you can only convert back into those dollars, well, 1 trillion times zero is still zero. And with the bail-ins set up in place, and even though they're changing the rules for the banks and making that much easier and deregulating, the bail-in rules where your wealth held in a bank, it's only your perception that it's your wealth. Once you make that deposit, legally, it actually belongs to the bank. So I think that people, if they do not prepare for a global financial system reset, which the central bankers have been calling for and working toward, all of the banks have really been working toward this hard since the previous crisis, your wealth will transfer their way, which essentially is what always happens in a crisis. And this is intentional. And this is most likely to be, because I'm not sitting in the meetings, a planned crisis. And what are you going to do when they close the bank doors, when you can't liquidate your stocks in your 401k or pull any of your wealth out of the system because it's all been bailed in? All you have to do is look at Greece and look at Cyprus. You can bang on the door. Who are you going to call? There's nobody to call. It's all online. There's nobody to call. So there's really nothing that you can do. For me, it's food, which is the biggest issue during hyperinflation. Food, water, energy, security, community, barterability, wealth preservation, and shelter. And the barterability and the wealth preservation is what you do with physical gold and silver. SLV, GLD, those are Wall Street products. You don't own gold. You don't own silver. You own a contract. And guess who wrote them? And guess who didn't read them? So assuming is a huge mistake. And if you haven't prepared, I've been preparing for a long time. But if you haven't prepared, you want to look at where you are weakest. And then you want to, as much as you can, start to fill that in. So whether that's food, water, energy security, barterability, wealth preservation, if it's any of those areas, then, start to fill in those holes. And when you feel like you've at least got a foundation here, move to the next one and do the same thing. But I'm going to tell you right now, you don't really have a whole lot of time left. We are definitely in the 8th inning. And when I say that last week, literally, we were within 10 minutes of a potentially World War III. You think nothing's going to go wrong? You think they're going to do everything perfect? I don't think so.
That's powerful, Lynette. Again, thank you so much for your time here and coming on Crush the Street and sharing your knowledge with us. Appreciate your time.
It's part of the community, isn't it? We're all in here trying to do the best job for the viewers out there that we can.
Yeah,
So
and for everyone who hates YouTube, I mean, all the Google censorship, there's a lot of love in a sense for what we have been able to do up until now with something like YouTube, because it has leveled the playing field
yes.
over the last 10 years compared to what we've dealt with prior to that. There's so much truth that has gotten out because of something like YouTube and, of course, the internet. So I'm very grateful for that. And again, thank you so much.
Oh, my pleasure, Kenneth, anytime.